the home loan and real estate guy. It's been a while since I've done a Facebook Live. It's been a couple weeks. There's a reason for that. I wanted to first share what's going on or what we're seeing in the second half of the year. One of the reasons we haven't done a video is we've actually been pretty busy. The second half of the year started off very well, and we're starting to see a lot of activity with home buyers, home sellers, and a lot of activity with even refinances. And this is really great news for the market. So again, I wanted to just come out this morning. It's a beautiful morning, by the way. For July, I think it's like 68 degrees out at my house. It's beautiful. Anyways, yeah, so I wanted to just take a moment and share what's going on and what we're seeing, or what I'm personally seeing with real estate in regards to home buying, home selling, and refinance activity. So over the last, I'm going to say probably like 60 to 90 days, mortgage rates, let's start with mortgage rates. Mortgage rates have been trending lower, okay? There's been a couple weeks where we've had some bumps and bruises and mortgage rates have jumped up to, elevated levels. But overall, the trend is that mortgage rates have been moving lower. And this has really started to fuel a lot of activity on the buyer side and with refinances. A lot of people have to remember over the last 3 years, mortgage rates have been at extremely elevated levels, 7 and 8%. So when we see mortgage rates touching the low 6% range, like right now, conventionals at 6.1 to 6.2, that spurs a lot of activity, right? It's all has to do with buyer affordability. Same with refinancing, okay? So anybody who's purchased within the last, 2 to 3 years at an elevated rate, they're welcoming these low interest rates. So we're starting to see a lot of activity happen on the refinance side. So I wanted to share that too, because a lot of people still think that mortgage rates are in the 7% range, and they're not. FHA and VA rates are in the high 5s, and conventional rates are in the low 6s. And the great news is they're moving lower. There's a lot of momentum in the markets, a lot of things that are happening behind the scenes that are helping suppress interest rates and push them lower. This trend is going to continue throughout the second half of the year. So for people who have, purchased at the beginning of the year, or maybe late last year when rates were elevated, high 6s, low 7s, you're going to have a lot of refinancing options in the second half of the year. So if you ever have questions about that, you want to know where current rates are, please don't hesitate, reach out. On the buy side, again, this is one of the reasons I haven't had a chance to really get out and do the videos, because we've been taking on a lot of applications. We've had a lot of phone calls from people who are looking to buy. When the first of the year started, we started off, right? A lot of changes, right? New administration, new policy changes. That kind of disrupts the market. Okay, I'm not going to get political, but a lot of uncertainty. There was a lot of uncertainty in the first half of the year. So a lot of buyers who wanted to purchase said, you know what? We don't really know what impact the tariffs are going to have on inflation, on the economy, on the labor market. So we're just going to kind of sit out, right? Go to the sidelines for a little bit. Well, we're 6 months in, and come to find out the tariffs are having very little impact on the economy. Matter of fact, they're having a positive impact. The United States is raking in billions and billions of dollars. So this is a positive thing that's going on with tariffs. And it really hasn't impacted the economy, consumer buying, the labor markets, as a lot of people thought. So people are just naturally a little bit more comfortable. Again, we're 6 months in, and people are like, you know what? Rates are coming down. There's a little bit more inventory coming to the market. For people who are shopping for like new homes, builders they got these crazy buy down incentives. Around us in Winchester, there are a lot of home builders that are offering 3.99, 4.99% interest rates. So buyers are like, whoa, that just made, home affordability much more affordable, because they're offering these really attractive interest rates. Builders are also throwing money at closing costs too. So again, just kind of making it a little bit more attractive for buyers to come out and purchase. So we're seeing a lot more activity on the buyer side. And on the seller side, we're seeing the same as well. Usually it's a little bit more activity on the buyer, less on the seller, or if it's a seller's market, there's more activity on the seller side than on the buy. But we're starting to see the same activity on the seller side. Sellers are recognizing, they're saying, hey, we've gained a lot of appreciation over the last 3 to 5 years. Let's take those equity gains. Let's move on. Let's relocate out of state. Let's make a move, either upsize, downsize. So a lot of people, buyers, sellers, they're kind of done waiting. And that's been the vibe. Most of the conversations that I've had over the last 60 days or so, the vibe has been, you know what, the economy's not that bad. They feel secure in their job. Again, they've seen mortgage rates come down. They have been holding on to their equity gains, and they're ready to make a move. They're ready to do something. And this is spurring activity all the way around. And it's not just me who is seeing this. I have a bunch of friends in real estate and lending in my area, in other states, and they're seeing it too. Just a lot of activity. And nothing crazy though, right? Like, I don't want to put it out there like the market's booming, right? No, to be honest, it's more normal, a little bit more steady. The phone calls that are coming in, what we're doing as far as, talking to buyers and their inquiries about, what's the direction of the market, game planning. All of this is starting to pick up, and it's really nice to see. And the conversations that I'm having are, again, conversations about moving forward, right? They've been waiting, and now they're just kind of ready to make a move. So I wanted to share all this and let everybody know that if you are somebody who was looking to buy, you were looking to sell, you were looking to invest, you've been waiting around for refinance and mortgage rates to drop, this is a very good time to reach out to me or to anybody that you know who's in real estate and lending and start those conversations, because activity is happening. And one thing I want to get across, and this is super important, and this is for the buyers on the buyer side. As mortgage rates move lower, and you've heard me say this many, many times before, as mortgage rates move lower, buyer affordability increases, okay? And what's going to happen in the months ahead is that as more buyers come out and they start purchasing property because of the low rates, all the seller incentives that are out there, some of that excess inventory that we've seen come to the market in the first half of the year, that's going to be taken off the market, okay? And we're not going to see crazy appreciation like, home prices just spike through the roof. Sorry, I'm getting over a cold too. Sorry about that. We're not going to see prices shoot through the roof, but what's going to happen is, as more buyers enter the market, as we're starting to see, and they start absorbing some of that increased inventory, naturally, supply and demand, home prices are going to push up. Depending on who you listen to, what research you've done, on average, right? National Association of Realtors, Zillow, Redfin. I'm naming these companies because I'm talking to the public. My real estate agent friends are going to go, I can't believe you quoted Zillow and Redfin. No, I'm just saying these companies because these companies advertise heavily to the public, and the public sees these advertisements more than what we see from NAR, right? The public's not getting anything from the National Association of Realtors. But bigger banks, JP Morgan Chase, oh God, what's the other one I was going to think of? Anyways, there's all these companies out there who analyze the market, okay? Analyze buyer-seller activity. And this year, home price appreciation is pegged by year end to equal 4.5%. And that's actually a pretty good appreciation rate, because I think last year it was the same. It was around 4.5%. Could have been a little bit higher, maybe 5%. But Anyways, 4.5%. That's on average. So some markets are going to appreciate higher. Some markets are going to appreciate a little bit lower. But on average, 4.5%. So if you take a $500,000 house, times that by 4.5%, that comes up to like $22,000 in appreciation in a year. You break that down on a monthly basis. What is that? That's like somewhere between $1,700 and $1,800 a month in appreciation. So there's enormous wealth in owning real estate. So again, for my clients who are out there or people who are interested in buying, this is actually a pretty good time to jump into the market because, again, mortgage rates have been coming down. You have a lot of seller incentives. Sellers are doing mortgage rate buy downs. They're paying for closing cost. Sellers just kind of want to move on too, right? They want to take their equity gains and they either want to relocate or, upsize, downsize, whatever the case may be. So they're much more willing to do things to kind of just move on. So this is a really good time to jump into the market. Another thing that I wanted to mention, and this is why I think we're getting a little bit more phone calls than normal because, and again, I'm not going to get political, but the big beautiful bill that was passed, that's what it was called, right? The big beautiful bill. There are a few things in that bill that are going to benefit people who are homeowners. And one of the things is, for especially first-time home buyers, PMI, the private mortgage insurance, 100% tax deductible permanently. So that's number one. And number two, 100% qualifying property improvements can be written off. So some of the phone calls that I've been getting, probably about a third of the phone calls that I've been getting over the last couple of weeks, has been from investors. Because if you're able to write off 100% of qualifying improvements within that tax year, that's huge for investors. So investors are starting to ramp up. And this is where we see the shift. Okay? It always starts with investors first. Either investors are the first ones to sell or they're the first ones to buy. They have a really good handle on the market. So when this bill was passed and these new laws were introduced, it's really going to benefit the real estate market, first-time home buyers, existing buyers, buyers who have PMI, investors, first-time investors. It's going to benefit the market. And again, we're already starting to see this. So I just wanted to share this information because, again, I do loans in real estate. I operate in many different states. And I just kind of wanted to get out there and share the positives. Again, sorry, I'm getting over a cold. I got a little bit of a runny nose, so I apologize. But again, I wanted to get out there and share this news and share this information. The real estate market is very healthy and very robust. A report just came out last month. The United States housing market has $34 trillion in tappable equity. That's huge. $34 trillion in tappable equity. Again, mortgage rates are moving lower. That big, beautiful bill was passed. That's going to help first-time home buyers and investors with more deductions. So it's even going to continue to grow and be more robust. So if you are somebody who's been looking to buy, this is the time. I would jump in. If you're looking to buy a little investment property, you want to kind of get in the market, do that because, again, you could go in and you could have 100% write-off on qualifying improvements. Mortgage rates are moving lower. So you're going to have more people interested in the market. And again, that's just going to kind of push values up. 4.5% appreciation. That's a really good amount too. So a lot of positives in the market. Just wanted to kind of share that. And then as always, if you ever have questions, my wife's going to yell at me because she edits these videos and it's like, I think I'm like at 20 minutes already. So I'm going to wrap this up. But if you ever have questions, okay, you want to know if it is a good time to buy, which I've already explained, good time to sell, or you want to plan, right? Even if you're not buying right now, but you want to maybe plan for the end of the year, next year, I cannot stress this enough. And everybody who knows me knows this. I'm not a pushy guy. I've worked with clients, funny enough, we've had 2 clients this year that I have been working with for the last 2 years. getting them ready to buy, getting their credit, getting their income all dialed in so that they could purchase. I'm all about planning and setting you up for what you want to do in real estate. I am here to help you with that. If you're looking to buy now, you're looking to buy later, I'm here to give you the advice, but really it's on your time frame and your schedule. So if you do have questions and you don't want somebody who's going to be pushy and be like, you got to buy now and da, 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 and all of that, just give me a call. I'll share everything that I know about the market with you, and we will put a plan together so when you're ready to make that move, right? Buy, sell, invest, you'll be all dialed in and you'll be ready to go. So anyways, just wanted to share all that. I apologize for, not being on the last couple weeks. Again, we've been busy. We actually did have our 20-year anniversary too, me and my wife. So a little personal note. My wife and I celebrated our 20-year wedding anniversary on July the 9th. And we took a couple days to go to Punta Cana in the Dominican Republic. And I got to tell you, for those people who are worried about traveling abroad to other countries, because of fears of how they might feel about United States citizens, everybody over in Punta Cana was super nice and very welcoming. We had a lot of great conversations with people. I met a ton of people from Canada, absolutely loved Americans, met a lot of people from Europe, a lot of people from Africa, all over the world. I mean, it was funny when we flew into Punta Cana, at the airport, there was, welcoming signs in Russia and Taiwanese and, French and all of it. And again, everybody that we met, they were super nice and super welcoming. And it was a very beautiful place to go. We had a really great time, and I'm glad that my wife and I were able to take a couple days off, unwind, relax, and just really get to go somewhere and enjoy ourselves and enjoy such a beautiful country and beautiful people. So I just wanted to say that because, I don't know, whatever. But yeah, so if you ever wanted to go on a vacation, go to Punta Cana. People are very beautiful, very nice and very welcoming, and they love the American dollar. So anyways, happy anniversary, babe. I love you, and take care, everybody. I hope you have a great day. Bye.